It may have been a Black Friday for retailers, but it was a black and blue Friday for investors who got beaten up pretty badly on Wall Street. Just about anything you owned was down on Friday. In fact, the Dow suffered its worst drop since April of 2020. And of course, back then we were in full COVID and everything was falling apart. And once again, the catalyst for yesterday's decline was a new COVID variant, this one coming out of Africa, most specifically South Africa, although I think there's some other countries. Botswana had a few cases, but South Africa seems to be the focal point. Last I read, maybe they had 100 cases. It's probably more by now. A lot of countries have already quarantined flights coming in from South Africa. No more flights allowed from that nation. They're trying to contain the spread. Actually, they also have a case in Hong Kong, and there's another case in Israel. Hong Kong and Israel, but that's the result of people traveling to those locations by plane from South Africa. So everybody is now clamping down. What's really concerning people about this new variant is the number of mutations. Apparently, far more mutations than we've seen with the original COVID or Delta. And this is what's got people concerned because they're not sure if the vaccines that are currently available will actually work given all the mutations of this variant. And if the vaccines aren't going to work, well, then what are we going to do? Go back into full lockdown until they can develop a brand new vaccine that'll work specifically with this variant? And then, of course, being fully vaccinated won't just mean getting 3 shots, but you'll also probably have to get a 4th shot and who knows how many boosters to protect yourself from this variant. And, of course, who knows how many other variants are out there? I mean, certainly there could be more. And so the markets now, which thought they had COVID behind them, are now staring at another potential disaster. And that's why you got the big sell-off in global stock markets. It actually started in the Asian markets because the news spread on Thanksgiving evening. And then, of course, the baton was handed to the Europeans. The European markets actually got beaten up the most. U.S. not quite as bad. And the reason for that is because we have all these big tech stocks that are associated with the stay-at-home play because there are many companies that benefited from COVID. And once again, money was flowing into those stocks. It was the economically sensitive reopening type stocks that got hit the most. That's why the NASDAQ was only down 2%, whereas the Dow was down 2.5% because you don't have as many of the stay-at-home stocks in that index. The S&P was kind of in the middle, down 2.2%. Russell 2000 beaten up the most, down 3.7%. That's more in line with what we saw in European markets, which seem to be down 4 or 5%. But if you factor in the euro being up 1%, the dollar declines in Europe were about the same as the U.S., maybe a little bit less than the NASDAQ and S&P, but not quite as bad as the Russell 2000 when you adjust for the exchange rate. But the stocks that did the worst, the airlines, cruise ships, restaurants, anything cyclical, the financials, energy stocks, consumer discretionary, the stocks that held up, consumer staples, they held up a lot better. But there were some winners, stocks like Netflix, DocuSign, Peloton, Affirm. These names all had big gains. I guess investors are thinking back to the last time we had a big COVID collapse, and those are the stocks that worked, and so they're piling into them again. But I really don't think Peloton or DocuSign, these companies were having a lot of trouble. They were coming out with bad earnings. I don't think all of a sudden everybody's going to load up on Peloton bikes again the way they did the first time. I think pretty much most of the people who wanted to lock down with a Peloton bike probably bought the bike during the first go around. So I don't know how much pent up demand there's left if we have to go back to a lockdown. I think a lot of this trading is just computer driven. I mean, they already have a program and they're just kind of reacting to it. My feeling is these rallies are probably likely good opportunities for people who haven't sold to get out, and maybe some new opportunities for some new shorts to come in and establish positions. I mentioned that the euro had a strong day. It was up about 1% against the dollar. This was, again, a very interesting aspect of what happened on Friday, because we didn't get a flight to safety into the US dollar. Where the safe haven flows were going were the Japanese yen and the Swiss franc, and to a lesser degree, the euro. The dollar was down about 1.7% against the Japanese yen. So that currency was the strongest currency on the day, followed by the Swiss franc. The dollar dropped about 1.4% against the franc. And in fact, if you look at where the market closed, the dollar pretty much settled on its lows against that currency. Same thing with the euro, where the dollar lost about 1%. So clearly the dollar is not a safe haven, or not the primary safe haven, given the fact that it was very weak against these other fiat currencies. Now, once upon a time, the world would have fled to the dollar. You would have seen drops in the Japanese yen, the euro, and the Swiss franc. Now, maybe those currencies would have gone down less than other currencies, but they would have all dropped in relation to the dollar, because the dollar was the preeminent go-to safe haven currency. Clearly, the dollar has lost that status already to these other currencies, and that does not bode well for the dollar in the future. Now, other currencies were weaker against the dollar, but that means they were even weaker against the currencies against which the dollar fell, and those were generally currencies that are more economically sensitive, like commodity-related currencies, like the Australian dollar or the Canadian dollar, which dropped against the US dollar. Speaking of commodities, the big loser on the day was crude oil. The price of oil dropped about $10 a barrel on Friday. That's a 13% decline. That is the fifth biggest one-day drop in the history of the oil market. Having traded above $85 a barrel just a few weeks ago, we're now at $68 per barrel. The oil market now looking at two potential problems. One would be a return to lockdown, which sees a big reduction in demand for oil because the airlines aren't going to be flying as much and people aren't going to be traveling, and so they're not going to be using as much energy. But also now you've got the U.S. and other nations that are going to be unloading oil into the market from their strategic petroleum reserves. Now, when the reserves were going to hit an economy that was fully functioning, they were probably going to get absorbed by the market. But to the extent that we get another lockdown where people aren't using energy as much, then it could be very problematic short run for the market. Although long run, the oil market is going to shrug this off. And if anything, it's just going to make additional supply from the oil industry that much less likely to actually materialize, because big drops like this scare the hell out of the oil industry, and more importantly, out of the banks that may be required to lend money to the oil industry to make the necessary investments to produce oil for the future. These type of big drops make securing financing less likely, and it also makes investors less likely to take a risk because they're shell-shocked from these type of declines.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.